I am Tom Kozlik, and this is the Hilltop Securities Economic and Municipal Market Update. On the economic side, we think that the current path is going to be much different than what we saw 10 years ago. The last downturn saw a long, slow drop to the bottom. And the recovery was also a long, slow crawl to the top. This time around, the economic path is going to be much different. And the recent reopening rollback is a good example of why. We very well could end up seeing waves and economic activity rising and falling. We also think that traditional economic measures are going to have less meaning this time around, and this is especially true for numbers that are week old. Enthusiasm for the relative positive momentum in the May and June jobs numbers, frankly, we think is overdone. Those numbers were stale before they were even released. An example of a number that is not stale comes from the Dallas Fed, and that is its Mobility and Engagement Index. The Dallas Fed's Mobility Engagement Index was not falling as of the national numbers were not falling as of the data that came out on June 27th. We were seeing some state-by-state data falling, for example, Texas, and again, this is data that came out on June 27th, so this is just at the beginning of the reopening rollback. The data that came out the week after, on July 4th, the national data was falling, and that is because it was better capturing the reopening rollback. We also think that this falling mobility engagement data is going to lead to falling overall economic data, and we think that this is important for lawmakers and investors to keep in mind going into next week when discussions are likely to occur about another round of COVID relief and stimulus. On the municipal side, the number one issue or question right now as it relates to the municipal bond market is whether or not there's going to be another round of relief for state and local governments. This could very well happen by the end of July or the beginning of August. Lawmakers are returning to D.C. next week, and they're expected to discuss this in detail. The consensus has been, at least since really the beginning of June, that support for another round of relief for state and local governments was building. Support's been coming from other sources as well. This week, former Fed Chair Ben Bernanke published an op-ed in the New York Times titled, "Give States Billions and You Help the Entire Country." He also noted Congress must act decisively to avoid repeating the mistakes of the recovery from the Great Recession. We should note, though, that more aid is not necessarily a slam dunk and political risk still exists. It is likely that fiscal conservatives, especially in the Senate, will weigh in heavily, and a compromise is going to be needed somewhere along the way. The HEROES Act, which was passed by House Democrats in May, included almost $1 trillion of aid for state and local governments, although Republicans in the Senate have not responded very positively to the HEROES Act. We think that state and local government relief in the range of something between $500 billion and $1 trillion would go a long way to helping reduce the negative impact that COVID-19 slowdown and reopening rollbacks have caused. Anything less, we believe, could be problematic.